Well, good morning and welcome everyone. This is an open meeting of the Public Company Accounting Oversight Board on June 30th, 2015. And we want to welcome all of you who have joined us today in person or listening to the webcast of this meeting. Today the board will take up a recommendation to issue a supplemental request for comment on rules to require disclosure of certain audit participants. The board will also consider a recommendation on a concept release on audit quality indicators. And before we proceed with the agenda, I will note for the record that all board members are present. The first order of business before the board today is a staff recommendation concerning a supplemental request for comment on rules to require disclosure of certain audit participants on a new PCAOB form. To present the staff's recommendation on this agenda item, I will turn to our Chief Auditor, Martin Baumann. Mr. Baumann.
Good morning, Mr. Chairman, and board members Harris, Ferguson, Hanson, and Franzel. Joining me at the table this morning are Jennifer Rand, Lisa Calandrello, Karen Wiedemann, and Morris Mittler. The Office of the Chief Auditor is pleased to recommend that the board issue a supplemental request for comment on its 2013 reproposal, which would require disclosure in the auditor's report of the name of the engagement partner and information about certain other participants in the audit. The supplemental request for comment presents an alternative for commenters' consideration, whereby this information would be required to be disclosed on a new PCAOB form instead of the auditor's report. Many people within the PCAOB were essential to the development of this supplemental request for comment. So before I turn the floor over to Jennifer Rand and Lisa Calandrello to present our recommendation, I would like to express my appreciation to Jennifer, Lisa, Jessica Watts, and Karen Wiedemann of the Office of the Chief Auditor, the team that led this project. I would also like to thank our colleagues from other divisions for their significant efforts, in particular Andres Vanelli and Morris Mittler in the Center for Economic Analysis, Nirav Kapadia and Stephen Rea in the Office of Information Technology, Sarah Williams and Carl Hierman in the Division of Registration and Inspections, Gordon Seymour, General Counsel, and certainly board members and their staff for their always valuable advice and contributions. Finally, I'd like to thank the staff of the Securities and Exchange Commission for their many contributions to the project. Jennifer?
Thank you, Marty. Good morning, Chairman and members of the board. We are here this morning to recommend that the board issue a supplemental request for comment on an alternative method for disclosing the name of the engagement partner and information about certain other participants in the audit. The alternative method being a new PCAOB form. Compared to disclosure in the auditor's report, which the board proposed in 2013, this could be a new middle ground approach to balancing the potential benefits of such disclosure with the potential impact on auditors' private liability and litigation risk. For several years, the board has been considering requiring auditors to provide more information about key participants in audits. Providing such information would provide additional transparency, which investors and other market participants have consistently requested. Further, transparency may also lead to increased accountability because decision makers can use the disclosed information to identify participants separately from the accounting firm signing the auditor's report. More recently, in 2013, the board issued a reproposal that would have required disclosure in the auditor's report of the name of the engagement partner and information about certain other participants in the audit. That reproposal remains under consideration. However, while investors have requested disclosure of this information and disclosure of the engagement partner's name is becoming the norm around the world, accounting firms and other commenters have continued to raise concerns about the potential for increased auditor liability or litigation risk in the United States if such disclosure is made in the auditor's report. Many commenters on the 2013 release urged the board to proceed with the new disclosure requirements if it determined to do so by mandating disclosure in a PCAOB form as a means of responding to liability concerns. Following this commenter's suggestion, the supplemental request for comment before you today would require disclosure in a new PCAOB form, Form AP, AP standing for Auditor Reporting of Certain Audit Participants. As the supplemental request for comment makes clear, disclosure on a form can function very much like disclosure in the auditor's report. First, the intended audience of Form AP would be the same as the intended audience for the auditor's report, investors and other financial statement users, and its filing would be tied to the issuance of an auditor's report. Next, the disclosure requirements in Form AP would be principally the same as included in the Board's 2013 release, with a few exceptions. And finally, in addition to filing Form AP, auditors could also decide to voluntarily provide the same disclosures in the auditor's report. To foster detailed input from commenters, the supplemental request for comment also provides a detailed discussion of potential economic impacts, including potential benefits and costs of disclosure in the auditor's report compared to disclosure on Form AP. I will now turn it over to Lisa Calandrello, who will provide you with more information about Form AP.
Thanks, Jennifer. The supplemental request for comment describes and seeks input on all aspects of Form AP, including disclosure requirements, form instructions, and the filing process. With respect to the disclosure requirements, Form AP would require disclosure of the name of the engagement partner and the names, locations, and extent of participation of other independent public accounting firms that took part in the audit. These disclosure requirements are reflected substantially as reproposed in the 2013 release, with some changes to the treatment of non-accounting firm participants and engaged specialists. In contrast to the 2013 proposal, Form AP does not include disclosure requirements for non-accounting firm participants, such as offshore service centers and consultants. Rather, it seeks feedback on whether such information should be required, either in all cases or in only specific circumstances. In addition, engaged specialists would be excluded from the disclosure requirements and computation of total audit hours. Form AP would be required to be filed no later than 30 days after the date of the auditor's report is first included in a document filed with the SEC, with a shorter deadline of 10 days for initial public offerings to ensure that the information would be available before any IPO roadshow. The supplemental request seeks comment on this filing deadline. Form AP would be filed in a similar way as other PCAOB forms to the PCAOB's existing web-based registration, annual, and special reporting system. Firms would be able to file forms one at a time or would have the option to file multiple forms simultaneously. Form AP information would be available on the Board's website in a searchable database. Users could search for information in a number of ways, such as by engagement partner, to find the audits that he or she led, and by company, to find the engagement partner and other firms that worked on its audit. Over time, enhanced search functionality could be developed, and in time, search results may be able to be downloaded. The supplemental request seeks comment on what search criteria and functionality users would want for information filed on the form. The supplemental request also seeks comment on how much time firms would need to implement the new requirement.
Thank you, Lisa. As Lisa just mentioned, the supplemental request for comment seeks input in a number of areas regarding the form. But overall, the supplemental request for comment seeks comment on all aspects of the Form AP alternative, including how Form AP compares with the disclosure in the auditor's report included in the Board's 2013 release. It also includes questions on economic implications and whether there are any special considerations relevant to audits of emerging growth companies, brokers and dealers, and other entities. We encourage commenters to read the supplement for comment in conjunction with the 2013 release. The staff is recommending that the Board issue the supplemental request for comment is substantially the form presented for public comment for a period ending on August 31, 2015. This concludes our remarks, and we would be happy to answer any questions you may have.
Thank you, Jennifer Rand. I want to thank Martin Baumann, his staff, and the others mentioned for bringing forward this supplemental request for public comment on the PCAOB proposal to require auditors to disclose in the auditor's report the name of the engagement partner and information about certain other participants in the audit, because this supplemental request seeks views on a potential alternative to disclosure of this information in the auditor's report, that is, through disclosure on a new PCAOB form. With this request, I believe we're nearing our ability to bring U.S. audits into line with international standards and practices that have proven effective for issuers, auditors, and investors alike in other markets. The proposal is a way to use the motivating power of our markets to incentivize higher quality audits. But to do so, the markets need information. As our recent Standing Advisory Group meeting illustrated, there's support for this idea from CFOs, board members, and investors. If the public knew about partner history and the relative extent of involvement of other firms that have their own records of good or poor auditing, the market could react by appropriately pricing the cost of capital. This makes intuitive sense, but studies have also shown that disclosure of the name of the audit engagement partner has made a difference in foreign markets. We've heard many arguments that what works in other markets doesn't necessarily work in the United States, and we have made several adjustments to account for differences that may be relevant, such as, in particular, auditors' concerns about liability and liability risk. That said, we should not ignore the benefits perceived in those other markets if they can be obtained here as well with some structuring. Our inspections of audits are instructive as well. Based on more than 10 years of experience, PCAOB inspections have revealed that even with a single firm, and notwithstanding firm-wide or network-wide quality control systems, the quality of individual audit engagement may vary. There are numerous factors required to achieve a high-quality audit, but the role of the engagement partner in promoting audit quality or allowing it to be compromised is of singular importance to the ultimate reliability of the audit. So, too, inspectors have found that auditors face and make important choices about how to organize multinational audits. There's no way for an investor to tell today how much of an audit was performed by firms other than the signing firm. In the case, say, of a large financial institution with major operations in 2 or more financial centers, a significant portion of the audit may be performed by other firms. Transparency about the partner and the firms involved should incentivize the audit firm to organize the audit team conscientiously, to give audit committees and investors comfort that that team is reliable. I'm grateful for the comments we've received on the proposal. I want to thank also the SEC staff for their assistance and their close consultation in this effort. Their assistance has helped us evaluate alternatives and design the form. There's already a robust record on this proposal, which began with a concept release and has been exposed in draft form twice already. The comment has been enormously helpful to confirm the benefit of the disclosures, minimize the costs, and identify and address any unintended consequences. I want to thank commenters for helping us get to this point and ask for their time once again to help us make the disclosures as useful and as effective as possible. I want to thank my colleagues on the board as well for all of their help and involvement in this project. With that, I want to turn to them for the statements, beginning with Board Member Stephen Harris.
Thank you, Mr. Chairman, and I commend you for your leadership and perseverance on the difficult transparency issues before the board. I'm a strong advocate of increased transparency on the part of the audit profession, and my views concerning this topic were reflected in my 3 previous open meeting statements. As you know, I would have preferred that we were adopting a final standard today. Instead, we are once again seeking comment on an alternative disclosure mechanism, this time involving the introduction of a brand new Form AP. Reviewing the history of this proposal, the board first considered this subject in 2009 when we issued a concept release related to an engagement partner signature requirement. I supported that release because I believe then, as I do now, that requiring the engagement partner to actually place his or her signature on the audit report would make him or her feel more individually accountable for the audit, and in addition provide investors and other stakeholders with improved transparency about the participants in the audit. When it became clear in 2011 that the signature requirement did not have the necessary board member support, the board proposed that the name of the engagement partner be disclosed in the audit report. In other words, the board proposed an identification as opposed to a signature requirement. The board also proposed that the issuing firm must disclose the name of the other independent public accounting firms and persons who took part in the audit, as well as the extent of their participation in the audit report itself. Although I prefer the signature requirement in the interest of promoting individual accountability and transparency and providing this critical information to investors and other users of the financial statements, I supported that proposal, as well as a re-proposal in December 2013. From the beginning, I believe that this initiative was particularly important because audit quality is not where it should be. PCAOB inspection results and the recent inspection survey conducted by the Independent Forum of Independent Audit Regulators, a group of some 50-plus independent audit regulators from around the world, show continued deficiencies in key areas of the audit. I believe that one way to improve audit quality is to make the audit engagement partner, the person most directly responsible for the audit, feel more individually accountable for the audit by having that person sign the audit report itself. I think Ann Yerger, Executive Director of the Council of Institutional Investors, representing investors with combined assets of more than $3 trillion, may have said it best at the PCAOB's Investor Advisory Group meeting on October 16, 2013, when she stated, quote, "I think there is no simpler or less expensive reform that should and could be put in place than requiring the disclosure of the name of the partner on the engagement. I think nothing sharpens the mind more than a signature," close quote. Views supporting a signature or identification requirement in the report itself have been continually echoed by investor representatives and others throughout the project, including at the board's recent Standing Advisory Group meeting on June 18, 2015, less than 2 weeks ago. The request we are considering this morning is a further dilution of previous proposals to identify the engagement partner in the audit report and is largely in response to liability concerns issued by commenters, which I do not share. This alternative we are considering has benefits. The name of the engagement partner will be available to the public and will be searchable on our website. Over time, investors will know when a particular engagement partner has been associated with a restatement of the financial statements, when an engagement partner is required to rotate off the audit of a company, and whether an engagement partner has been the subject of any public disciplinary proceedings. In addition, investors will also gain important information about the other participants in the audit and the extent of their participation. In my view, however, this alternative complicates what had been up to this point a straightforward proposition by requiring the filing of an unnecessary and burdensome new form. The premise underlying previous proposals was that investors, if they were so inclined, could find the name of the engagement partner in the exact same place where they would learn about other details of financial statements in the audit report. As noted in the board's economic analysis, it could impose search costs on a user of the financial statements that decrease the benefit investors and other users may have received from our original proposal in 2011 and subsequent re-proposal in 2013. In other words, what was intended as a service to the user could become a burden, as many users would have to look in more than one place in order to find pertinent information about the audit. The CFA Institute, which is comprised of more than 115,000 certified financial analysts, including portfolio managers, investment analysts, and advisors worldwide, made a similar point in their March 2014 letter to the board. Their letter related to the board's auditor report initiative. They reiterated their support for disclosing the engagement partner's name in the audit report, writing, quote, "We also believe by attaching it to the opinion, further accountability would be established," close quote. The alternative the board is currently considering also isolates the United States from emerging global concerns on the manner in which the name of the engagement partner should be disclosed. For example, 16 out of the 20 countries with the largest market capitalization, including 7 European Union member states, already require disclosure of the name of the engagement partner in the auditor's report. Finally, I have yet to hear a convincing argument why an audit engagement professional should be treated any differently from other professionals in the United States, such as architects and engineers who have lead responsibility for the work products of their group efforts, or from a CEO and CFO who are required to attest to the financial statements of their companies under Section 302 of the Sarbanes-Oxley Act of 2002. Kenneth A. Goldman, CFO of Yahoo, conveyed the same sentiment during the board's June 18, 2015 SAG meeting, stating in part, I am proud to sign on behalf of my company when I sign, and to me, it should be the same in terms of the auditing profession. They should be proud too. And to try to put it on some other piece of paper, which is hard to find, I don't quite see the benefit of doing that versus signing somewhere very visible under the opinion. I agree and view the alternative contained in the supplemental request to be suboptimal. That said, I understand that the request before us is the best we can do at this time and is being proposed along with the 2013 reproposal. I look forward to the response from all commenters to the questions posed in the release, particularly to the first question. Would disclosure on Form AP as described in this release achieve the same potential benefits of transparency and an increased sense of accountability as mandatory disclosure in the auditor's report? Mr. Chairman, as I said at the outset, I commend your leadership on these matters. I support the issuance of this supplemental request in order to elicit the additional comments the Board believes necessary to finalize this project, which I hope after all this time will be in the near future. Finally, I join you in thanking the staff for their extremely hard work on this challenging initiative. Thank you.
Thank you, Steve. One of the real difficulties of chairing this board is figuring out what your colleagues on the board really think about this issue. With that trepidation, I turn to Louis Ferguson. Mr. Ferguson.
Thank you, Mr. Chairman. I've long supported public disclosure of the names of individual audit engagement partners and the disclosure of the identity of other audit firms that provide significant portions of the audit work. Today in the United States, where audit reports are signed only with the audit firm's name, it is impossible to tell who actually performed the audit. In this supplemental request for comment, we are seeking information specifically with respect to a new means of disclosing the name of the engagement partner and other firms that would be major participants in the audit. This approach may mitigate at least some of the concerns under the federal securities laws that arise if such information is disclosed in the audit report itself. We also seek comment on disclosures regarding the non-accounting firms participating in the audit, and we consider excluding identification of any specialist engaged by the audit. Those who've resisted public disclosure of the audit partner's name have made basically two arguments. First, that the audit is really a group endeavor, and to single out a single individual is misleading. And second, that the information doesn't provide that this information is not really useful to investors. And I disagree with this contention for two reasons. First, it is the engagement partner with whom the audit committee has the closest relationship among the audit team. Audit committees are also frequently active participants in the choice of the engagement partner to lead the audit of their companies. And the background, skills, and personal attributes of the engagement partner are matters of great interest and concern to audit committee members. That fact alone suggests to me that the engagement partner's identity may be of interest to investors. Second, I believe that as regulators, we are wisest to leave the determination of the usefulness of most information about the audit, including the engagement partner's name, to investors themselves. I do believe that even if the disclosure of a mere name has limited usefulness initially because of limited public information available about particular individuals, over time, a body of data about individual engagement partners will be developed that may be very informative and useful. It seems likely that eventually information will be publicly available about engagement partners such as the companies they've audited, their industry experience, any disciplinary actions in which they've been involved, and likely other information. This body of information should be of use to those who use financial information and audit reports. As such, it will enhance the operation of our capital markets because it may enhance users' ability to assess the reliability of the audit report and be better informed when voting on whether to approve the selection of auditors. We've been on a long journey to reach this point, and this is still only a way station. In this supplemental request for information, we are seeking comment on a new approach to getting public disclosure of information while limiting to the greatest extent possible the difficulty, costs, and liabilities risks to those providing the information. We've heard commentators object to the project on the grounds that requiring an engagement partner to sign an audit report or to be named in the audit report may increase an auditor's liability in two ways. And this is our second attempt to address those concerns. In my view, the proposal in this supplement request for comment will eliminate the first of the two issues that have been raised, namely concern that the engagement partner's signature of or naming in the audit report would require auditors to file consents with the Securities and Exchange Commission in the event of inclusion of the audit report in a registration statement, and they would thereby be subject to potential liability under Section 11 of the Securities Act of 1933. Commenters have also had a concern that naming the engagement partner in the audit report would increase the likelihood that auditors could be found liable under Section 10B of the Securities and Exchange Act of 1934 for two reasons. First, identification of the individual engagement partner would allow Section 10B plaintiffs to establish reliance on the engagement partner and not only his or her firm. Second, the engagement partner could be viewed as the maker of the statements contained in the audit report. The law in this area is unsettled and developing, but I believe the solution proposed in this supplemental request, disclosure of the information on a new Form AP disclosure, may, at least in the minds of commentators, somewhat alleviate the concern, or at a minimum, not make it any greater than it was in the previous version of this proposed rule. Does naming the engagement partner make him or her more likely to be named in a Section 10B lawsuit? I don't think so. In any event, I'm not convinced that whatever increased risk disclosure of this information may pose under Section 10B outweighs the public interest in having the information made available. I'm interested in the views of commentators as to whether the proposed disclosure in Form AP is preferable to disclosure in the audit report, and also whether there will be any loss of transparency or difficulty in using this information caused by the disclosure in a form filed with the PCAOB. I extend my thanks to the PCAOB staff in many divisions who've worked tirelessly to consider the commentators' concerns and draft this supplemental request for comment in an effort to address those concerns, while preserving the important objective of this project, greater transparency into the identity of the participants in the audit. In particular, thanks to Jessica Watts, Martin Baumann, Jennifer Rand, Lisa Contrariello, Ekaterina Disna, Karen Wiedemann, Morris Mittler, Andres Finelli, and John Powers. Thanks also to the Offices of Information Technology, who have been working to create a Form AP and making it searchable, and thanks to our Office of the General Counsel. As usual, the staff of the Securities and Exchange Commission has provided thoughtful comments on the draft and the project as a whole, and their guidance on the implication of the proposal under the federal securities laws, of which they are the principal interpreters, has been invaluable. As mentioned above, I support issuance of this supplemental request for comments and look forward to reaching the point where we are able to issue a proposal on this project.
Thank you, Louis. Board Member Hanson.
Geez, Lou, I'm rapidly running out of insightful things to say. You've, between you and Steve, you've pretty much covered them all. So the board is issuing today a supplemental request for comment in connection with the project concerning potential amendments to the PCAOB standards to publicly identify the engagement partner and certain other participants in the audit of public companies and broker-dealers. The project has a long history, as we've already talked about, dating back to the 2008 recommendation of the U.S. Department of Treasury's Advisory Committee on the Audit Profession. And since then, we've had a variety of approaches to it, and today we're settling down to something potentially different than those prior approaches. In the end, it comes down to appropriate balance between the potential costs and benefits. Investors we have heard from have told us they would find useful the information we propose to require audit firms to disclose, particularly the name of the engagement partner and the names, locations, and extent of participation of other independent public accounting firms that took part in the audit. However, the potential consequence of doing so either through an engagement partner signature or through a disclosure requirement in the audit report are great, particularly the costs and uncertainties that could arise from the potential liability of partners and firms under a variety of federal securities laws. Therefore, the board has extended much time and effort trying to determine how best to give investors the information they want without unduly imposing costs that would ultimately be borne by all participants in the capital markets. I support the approach in which we are seeking comment today. It remains to be seen how useful the information will be to investors, and we may not know that answer until disclosure has been collected for a period of years and put into context by investors, data aggregators, the media, and others. But in light of investor demand for the information, it is appropriate for us to provide it, assuming that the negative consequences do not outweigh the positive. I believe the disclosure on a separate PCAOB form rather than the auditor's report would accomplish that goal, but I look forward to hearing from commenters on whether they agree. I won't repeat the details that Jen and Lisa have so ably described, but I'll just point out that we're really hoping to get concrete feedback on the logistical part of this, whether it's actually doable and whether the information would be in a useful format for investors. I also am interested to hear the comments on what has been noted about the path forward, potential paths forward on non-accounting firm participants. So we've got a couple different considerations there, so look forward to those comments. In a few minutes, we'll be hearing from another one of our teams on a project underway relative to audit quality indicators. Without getting into those details, which the staff will cover in a few minutes, I will note only that identifying engagement partners and other firms will likely paint a partial picture of audit quality, but supplementing that information with other information relative to the evaluation of audit quality, such as details about the engagement team, auditor workloads, experience and expertise, or the firm's system of quality control, may help audit committees, investors, and others gain a much more complete understanding of how and by whom quality audits are performed. Finally, earlier this month, SEC Chief Accountant Jim Schnurr noted that he expects the SEC to issue in the near future a concept release to seek feedback regarding how investors currently use the information provided in audit committee disclosures, as well as feedback on the usefulness of potential enhancements, including additional disclosures. I applaud this important effort by the SEC and look forward to learning the details. Because the issues to be explored by the SEC may overlap with our request for comment we're issuing today, I urge commenters to consider our projects together and to provide us with feedback on how we could best balance the disclosures to be provided by auditors and those to be provided by audit committees. So finally, I will thank the staff without naming all of them again, but I really appreciate all the hard work it's taken to get us there, and it seems like at every turn here we had another roadblock to overcome, so appreciate your diligence getting through that, as well as the staff of the SEC for all the hard work they put into it.
Thank you, Jay. Board Member Franzel.
Thank you, Mr. Chairman. Before the board today is another variation on proposals to provide transparency about the name of the engagement partner and information about certain other participants in the audit. With today's release, the board will have issued releases for comment on this matter every 2 years, beginning in 2009 for a total of 4 releases. I will have been here for only 2 of those releases, counting today, 2013 and today's release. So I'm not going to reiterate all of the technical details and complications about this project, which have been very ably expressed by my fellow board members and the staff. But I do want to talk a little bit about where we were in 2013 versus where we are today. In my public statement on the board's 2013 proposal, I expressed support for the board's objectives of providing information about participants in the audit process to investors and other stakeholders. However, I also expressed concerns over the extent of unanswered basic questions surrounding the board's proposal at that time, including whether the board had empirical and theoretical support for each of the stated objectives in that release, whether the board had fully analyzed the potential benefits and costs of the proposal, and whether the board was speculating about how its proposal met multiple and shifting objectives, and whether it reflected the best approach among the reasonable alternatives. I'm pleased that today's supplemental request for comment reflects a more complete and supportable analysis of many of those questions that I raised in 2013. It is unfortunate that it has taken so long to get to this point, but these are complicated issues, and I commend the staff on their perseverance and the analysis. The good news is, in my view, the economic analysis accompanying this release is significantly improved in comparison to the 2013 release, in that it presents more refined objectives that are accompanied by more thorough and supportable analysis, including improvements in the use of relevant empirical research. So I commend the staff on the hard work that went into that analysis that helped support this proposal. I encourage commenters to focus on the economic analysis considerations presented in Appendix 2. And although the supplemental request for comment focuses on the option of disclosing information in a new form, the board continues to consider the bigger questions of whether to mandate disclosure, and if so, whether disclosure should be made in the auditor's report or on Form AP. And the board is considering the trade-offs as it evaluates the potential of these two different disclosure mechanisms to achieve transparency and an increased sense of accountability. I support the transparency and accountability objectives of this project. I also support the goal of finding a way to provide investors and other financial statement users with information that could add to the information available to them when evaluating individual audits. As the board continues to complete its analysis and deliberate on these key questions, I invite commenters to focus on the economic considerations in Appendix 2, as I've already mentioned, along with the detailed questions about the new alternative. And I want to thank the staff for their perseverance and hard work in this matter, and I'm pleased that we're able to issue this release today.
Thank you, Jeanette. We'll follow our usual custom of each board member asking one question. We'll go through the ranks and then double back if we need to. And Jeanette Franzel, question?
Yeah, my question is on timing. Given the proposed effective date for reports issued on or after June 30th, 2016, what do you see as the timeline and the next steps here to get to that point?
Well, the comment period closes on August 31st. And again, we hope we get many comments on all aspects of this supplemental request for comment. And the staff will then promptly analyze these comments and share them, the analysis with the board and SEC staff. So the exact timing will then depend upon the comments received, discussions we have with the board and SEC staff. But as indicated by your comments, the goal is to get through that in sufficient time to get an adoption done such that the disclosures of transparency would be required for reports issued on or after June 30, 2016. The exact dates in between then will require diligent work by all the folks that worked on this to date, and as well as working with the board to get through the nature of the comments and resolve ourselves to the satisfaction of them.
Board Member Hanson.
I don't have any questions.
Mr. Ferguson.
I have no questions.
Mr. Harris.
I have no questions.
Congratulations. This is the first meeting that I think that we have attended in which there were not extensive questions, and Jeanette's was very useful because it gives us a sense of where we're going forward. Will all board members in favor of approving the recommendation please say yes? Yes?
Yes. Yes.
All opposed? Votes are unanimous. Thank you.
Thank you.
Our second agenda item is a staff recommendation on a concept release on audit quality indicators. And for that recommendation, we turn to our Office of Research and Analysis, who are just coming to the table. Mr. Jonas, Distinguished Director of Office of Research and Analysis, will you introduce your colleagues and the proposal?
Thank you, Mr. Chairman. George Wolfert to my left and Steve Kroll to my right and I are pleased to first present some framing comments about the concept release that you're considering today. This project has proceeded with the encouragement of a great many stakeholders, including the Treasury's Advisory Committee on the Auditing Profession, our Standing Advisory Group, our Investors Advisory Group, the Center for Audit Quality and audit firms, many individual audit committee members, the SEC staff, and other audit regulators around the world. The board named this a priority project in 2013. Big picture, the premise of the project is that major parts of the audit effort are less than fully transparent, and that AQIs, which are quantitative measures that might provide incremental insight into audit quality, can enhance the discussion among stakeholders, for example, among audit committees and audit firms. That enhanced discussion about audit quality could indeed encourage auditors to do their very best work. And that enhanced discussion, in turn, could also stimulate competition among audit firms based on the quality of their work, which, of course, could also promote audit quality. At its root, this project seeks to answer two questions. First, can we develop a portfolio of quantitative measures that provide new insight into audit quality? And if we can do this, second, how can we deploy these measures in a manner that best promotes audit quality? Steve Kroll will discuss how the document addresses the first question, and George Wilford will discuss the second question. Steve?
Good morning. The AQI project hopes to identify key variables, which we call indicators, that provide new insights about audit quality and how high-quality audits may be achieved. These indicators are quantitative. They're intended to measure the variables. And they must operate as a group. But they are not formulas, they are not algorithms, and they are not benchmarks. Context provided by each audit or audit firm to which they may be applied is essential to using them and understanding their meaning. For this reason, the indicators are likely to be best used to inform discussion. They are unlikely to answer questions themselves. They are more likely to cause stakeholders to ask the right questions of auditors and audit committees. The release identifies 28 potential indicators, which fall into three groups. The first group is audit professionals. It includes measures dealing with the availability, competence, and focus of those performing the audit. The second group is audit process and includes measures about an audit firm's tone at the top and leadership, incentives, independence, attention to infrastructure, and record of monitoring and remediation. The third is audit results and includes financial statements, internal control, going concern, communications between auditors and audit committees, and enforcement and litigation. Although we have done a good deal to think through and screen the indicators, we do not want you to think that we have all the answers. The release makes, in my judgment, absolutely clear that pointed comment on the nature and details of the indicators is encouraged. Questions in the release and its appendix seek guidance on, among other things, whether the concepts underlying the AQIs are valid, whether various indicators should be taken off the list and others added to it, whether the necessary data are available, and whether the cost of creating the AQIs is reasonable, whether the AQIs are scalable for firms of different sizes, both audit firms and public companies, and how the indicators should be evaluated.
Thanks, Steve. Good morning. Having discussed the nature of AQIs and examples of specific AQIs, the concept release next turns to how AQIs could best be used to inform discussion and promote audit quality. More specifically, the release discusses 5 issues on how AQIs may be used. First is the topic of potential users of AQI data, including audit committees, audit firms, investors, and regulators, and how those users might use AQIs in their work. Second is how AQI data might be obtained and distributed. Third is whether the use of AQI should be voluntary or mandatory. The fourth topic covers the scope of audits and audit firms that may be subject to AQI reporting. The final topic is the possibility of phasing in steps toward AQI reporting and use. Although the concept release discusses these projects, it takes no position on them. Rather, it identifies alternatives, outlines related pros and cons, and seeks input on broad questions about the best use of AQIs. In addition to questions about the 5 topics I mentioned, the release poses questions about the costs and unintended consequences of using AQIs. The concept release acknowledges a wide range of possible ways forward using AQIs to inform discussion and promote quality. Hopefully, the release's discussion on the possible use of AQIs will inspire comment. The staff is confident that the public input will assist the board in determining the scope, timing, and potential effect of any possible future AQI efforts.
So in closing, the concept release requests comments toward the end of September. It also recognizes the usefulness of a public hearing on AQIs and their possible usage. And we plan to schedule the hearing in the fall, assuming the board's approval, but following the comment period, so that participants could benefit from the comments of others prior to the hearing. The staff believes that the use of AQIs offers great promise of informing discussions about audit quality and thereby encouraging good auditing. Yet the board has recognized the complexity of the issues and I believe is being diligent in getting facts and a wide range of input before deciding on a course of action, if any. I'm confident that today's concept release has teed up important issues in a substantive and detailed manner, and that it will inspire stakeholders to weigh in with important insight. The staff recommends the concept release for the board's approval without reservation.
Thank you, Craig. The concept release before the board, as you note, reflects extensive outreach to stakeholders and to experts to identify information that could help the users of public company audit services to assess the quality of an audit. Today, important aspects of the audit are behind the scenes, and little is known other than the name of the firm that conducted it and the fee. In an environment where all audits look alike on paper, it should be no surprise that there is considerable pressure and competition on the basis of fees. With more information about the inputs of audits, I hope to balance that pressure with more competition on quality as well. It's a subject that Greg Jonas and I discussed some years back when I lured him to the PCAOB. If we could shift the emphasis to a debate on fee to an evaluation on quality, that would be good. Now, make no mistake, we're not proposing that one could apply a single or even a set of formula to gain assurance that an audit is infallible. But the idea behind these measures, as with other transparency initiatives, is that disclosure helps users differentiate among choices, including choices about the kind of audit they want. As with our transparency project to disclose the name of the engagement partner and other firms, some of these potential measures may be useful to market participants to differentiate audit quality. In addition, we've also sought to identify information that could be useful to audit committees in overseeing the work of their own company's auditors. Today's concept release is an important step in our exploration of ways to help audit committees. Some of the potential measures discussed in the concept release are based on tools we understand some audit committees have already designed and use effectively in their oversight. Others are measures that we found useful in our oversight. All the proposed measures are based on more than 2 years of extensive research and outreach by our Office of Research and Analysis and others. We've had 3 discussions with our Standing Advisory Group about the project to obtain members' reactions and insights. We've discussed the project with our Investor Advisory Group. Our staff in the Office of Research and Analysis have had numerous additional meetings and discussions with a full range of other stakeholders, including audit committee members, firms, and their representatives, investors, academics, and others. I want to thank Greg Jonas, Director of the Office of Research and Analysis, for his leadership in bringing this important project to this point. Greg's vision for finding ways that we can help audit committees identify and support audit quality have been critical to this project, and they've contributed more broadly to initiatives throughout the PCAOB. I also want to thank the staff of the SEC, in particular Brian Croteau, Kevin Stout, and Hadid Shah, for their support and valuable insight into this project. We've had a long public comment period given the newness, breadth, and nature of the proposed measures, and I look forward to reaching an even broader cross-section of people with insights and advice as we hone these measures. I also look forward to advice from audit committees that have employed these measures or other measures that merit consideration. After the comment period, we expect to have a public meeting to explore the opinion and advice that's given even more deeply. And at that time, we will reopen the comment period, in order again to solicit public views. And with that, we will turn to statements by other board members. Board Member Harris.
Thank you, Mr. Chairman, and given my previous statement, I hope you'll appreciate that I enthusiastically support the issuance of this concept release on audit quality indicators and the accompanying Appendix A. One of our most important duties at the PCAOB is to promote high-quality audits for the benefit of investors. One way of doing this is to ensure that firms focus and compete based on audit quality. I view the board's issuance of this concept release as a significant initiative in advancing this objective. By exploring possible indicators of audit quality, the Board is taking a positive step to promote a more vibrant market in quality audit services, while at the same time helping to counter pressures on audit firms to reduce audit effort or resources inappropriately. There is a wide consensus that audit quality indicators, if developed and utilized appropriately, would benefit multiple parties, including regulators, audit committees, audit firms, and investors alike. The concept of developing indicators of audit quality is not new. As has been pointed out, the final report by the Department of the Treasury's Advisory Committee on the Auditing Profession discussed audit quality indicators in 2008, recommending that the Board, in consultation with other parties, quote, determine the feasibility of developing key indicators of audit quality and effectiveness and requiring audit firms to publicly disclose these indicators, close quote. That committee comprised of a wide variety of stakeholders, including, amongst others, representatives from the profession. Investors and preparers suggested, quote, requiring firms to disclose indicators of audit quality may enhance not only the quality of audits provided by such firms, but also the ability of smaller auditing firms to compete with larger auditing firms, auditor choice, shareholder decision-making related to ratification of auditor selection, and PCAOB oversight of registered auditing firms, close quote. Since 2008, the idea of developing audit quality indicators has continued to gain traction and has been mentioned several times at meetings of the PCAOB Standing Advisory and Investor Advisory Groups. AQIs have also been the subject of international debate for many years. As one example, considerable attention was devoted to the subject at the 2014 plenary meeting of the International Forum of Independent Audit Regulators in Washington, D.C., where a number of audit regulators confirmed that they had begun to use audit quality indicators to plan and evaluate their inspections. Earlier at the October 16, 2013 meeting of the Board's Investor Advisory Group, investor representatives recommended that the PCAOB develop a set of audit quality indicators that measure the quality of the audit, help establish accountability for the audit, are forward-looking and have informational or predictive content. The Board's IAG urged the Board to consider indicators at both the engagement and firm levels and suggested AQIs take into account that audit firms have varying levels of expertise and market penetration in different industry sectors. At that meeting, the report from the IAG's Working Group on Audit Quality Indicators identified specific engagement and firm-level indicators for the Board's consideration. As noted in the concept release, 17 of the Working Group's 27 proposed indicators are included in the 28 potential indicators discussed in the accompanying Appendix A. This project was initiated in order to identify a portfolio of quantitative measures of public company auditing whose consistent use may enhance dialogue about and understanding of audits and ways to evaluate their quality and to explore how and by whom the portfolio of indicators can best be used. These quality indicators are meant to identify and quantify key variables that affect the work of audit professionals and the audit process that would serve to assist users in the evaluation of audit results. The release sets forth and seeks comment, as has been indicated, on 28 potential indicators, which are divided, as the staff indicated, into 3 indicators: the audit professionals performing the audit process, and the audit results. These indicators are designed to help the Board and other regulators, audit committees, audit firms, and investors form a deeper understanding of the audit, the engagement team performing the audit, and the audit firm in order to make more informed decisions. I believe the AQIs will prove useful to these users for the following reasons. With respect to the Board and regulators globally, as the release makes clear, the data can inform the development of inspection strategies and also provide regulators with insights into trends in overall audit quality to form an expanded basis for reports on the state of quality at the firm, network, or profession levels. It can broaden the foundation of regulators' consideration of policy issues. An expanded use and analysis of AQIs could inform analysis of the root causes of inspection findings, evaluation of firms' remediation efforts, and the effort to update auditing standards, including those related to audit firm quality control. With respect to audit committees, I believe these indicators will assist independent audit committees in selecting their auditors. For instance, their understanding of such indicators as engagement and firm-level staffing leverage, partner workload, industry expertise of audit personnel, and experience of audit personnel should make their audit selection process more informed and meaningful. Audit firms should benefit from established audit firm indicators by allowing them to distinguish themselves for audit quality and compete on that basis in the marketplace, which in turn should encourage those firms that are lagging behind to improve their efforts. And AQI data has the potential to significantly expand information shareholders use in deciding whether to ratify their company's choice of auditor, or at least form a basis for raising questions that could do so. As the release notes, the majority of public companies currently ask their shareholders to ratify the auditor selection annually. Those shareholders, however, have very limited insight into the quality of the audit other than negative events such as restatements or the board's inspection reports. AQIs should aid shareholders in making those auditor decisions. In my opinion, the release does an excellent job of explaining how the indicators operate at both the engagement and the firm levels, and the appendix clearly and succinctly explains what each indicator is designed to measure. The release is meant to elevate the debate on what would amount to the most meaningful audit quality indicators in order to improve audit quality and hence further the interests of and protection of investors. The board welcomes comment and recognizes that some indicators are more likely to be useful and feasible than others, and that the list of 28 indicators is likely to be modified. The board also welcomes debate regarding which AQIs should be mandatory and which voluntary. In sum, I believe today's release marks a significant step forward in enabling various stakeholders to better monitor audit quality as in the best interest of investors. And I commend the staff for producing this concept release on a subject that has been a priority for investors and other stakeholders for close to a decade. And as with the release and the reproposal on transparency, I appreciate the relationship with the SEC and the work between our two bodies. And I would ask, Mr. Chairman, that the permission for my full statements on both be put in the record.
Always, absolutely. Thank you, Steve. Board Member Ferguson. Yeah.
Yes, I want to start off by thanking the staff of the Office of Research and Development for undertaking this remarkable project in the first place. I know we've heard repeatedly that although knowledgeable people know a quality audit when they see it, the elements that make up such an audit are too elusive to be defined. And the consequence of this view is that the audit becomes a commodity where audit firms compete primarily on price rather than on the quality of their service. And this leads to a view, unfortunately common among some audit committee members and financial managers, that it's sufficient to have an audit performed as cheaply as possible as long as it's done by a reputable auditor, and that there's no added benefit in seeking an exceptional quality audit, especially if it might cost more. This is associated with the view that shareholders do not benefit from a more extensive, intensive, and expensive audit, because the end product of the audit report is standardized and the quality of the audit is not really apparent to the public or even the audit committee in the absence of a catastrophic audit failure. One might have thought that 12 years of PCAOB inspection data revealing widely differing audit quality among audits even within audit firms would have laid those arguments to rest, but the evidence is too often to the contrary. I do not agree with this view that all audits are essentially the same, and I believe there is a difference between a high-quality audit and an adequate audit. To the extent measurable audit quality indicators can be identified, they may help to mitigate some of the downward price pressure that has emerged in an environment where audit is viewed as a fungible commodity. It will be easier for those providing services to justify a fair price for the audit if they can also point to measures that show that the purchaser of the audit is receiving value for the additional cost. It's my hope that this will lead to competition on quality rather than price in the selection of auditors. Such competition may be our best hope to raise audit quality overall. Now, much of what we have to do here at the PCAOB is focused on inspections, and the output of those inspections is identification and publication of information about points of failure within an audit. While this is a critical part of our statutory mandate, I also believe it is important to understand what leads to high-quality audits as well as failed audits. I'm enthusiastic about a project that will contribute to the push towards audit quality by identifying positive as well as negative markers, and that may be able to encourage behavior that will lead to better audits by rewarding quality-focused efforts with quantitative recognition. With this project, I hope that the old saw about recognizing a quality audit but not being able to define it is about to be put to rest, and I support the effort to come up with indicators that are quantitative and measurable over time. These audit quality indicators may not be the only ones. They may not even be the right ones, but they will begin a discussion to put more precision around the quality of audits, auditors, and audit firms. To the extent these can be developed, they will be of great use to audit committees, management, and other users of financial statements and audit reports. They will also allow comparison among firms and engagements. Again, without reiterating the names of everyone, I want to thank the various staff members, the many staff members of the PCAOB who've worked on this project, and also for the very valuable comments from our colleagues of the SEC, the members of our Standing Advisory Group, our Investor Advisory Group, and the members of IFER, all of whom have given us input for this release. So thank you.
Thank you, Louis. Board Member Hanson.
Thank you, Mr. Chairman. This has been a challenging project, and I'm pleased that we're here today. As has been noted, we started this discussion in earnest back in fall of 2012, so this has been a 2.5-year project now, and it's has been pointed out by Steve and others. It's been discussed at SAG meetings, IAG meetings, and various other meetings, and I appreciate the countless hours that our staff has spent studying the issues. With the assistance of the staff of the SEC, we have carefully considered not just what indicators may provide helpful information, but about whether and how relevant information could be obtained, whether it could be aggregated and measured, and whether there may be negative consequences that could result. While we knew for many years of experience that developing measurable audit quality indicators would be challenging, it has turned out to be that and more. Although it took 2.5 years to get to this point and much work has been done, today's concept release can best be characterized, if I may borrow the words of Winston Churchill, as the end of the beginning. So lots of work ahead of us in this as well. So the concept release study is a list of 28 possible, includes 28 possible indicators in which the board seeks comment. Some of these are relatively straightforward, and the information is currently available and often tracked by firms. Examples include staffing leverage, audit hours, workload, expertise and experience of the team, independence information, inspection results, and others. Other indicators may require affirmative steps to produce the data, such as a suggested survey of firm personnel to gauge tone at the top, and yet others raise difficult questions about how to measure audit quality, for example, based on the auditor's detection of fraud or financial reporting quality. Some of the indicators raise difficult practical questions, while others implicate legal issues, including the larger disclosure framework under applicable securities law. There's also variation in the degree to which the concept release defines the potential indicators, with some clearly laid out and others described at a more conceptual level. We are seeking comment on the measures themselves, their potential usefulness, and how they might be used by firms, audit committees, investors, issuers, academics, and others. I believe this project has great potential to provide the marketplace better tools to evaluate the quality of audits, to increase understanding about how good audits are performed, and allow firms to compete on quality rather than price. My wish is that audit quality indicators will help us better understand the long-term trends in audit quality and contribute to our own self-evaluation of our effectiveness. The release describes our hope to narrow the list of indicators. The feedback from this concept release should help with that narrowing. We're also working with the challenging task of testing whether our list of indicators is correlated with observations of high audit quality. I'm sure we'll get more ideas to add to the list. We may receive feedback that ranks indicators against each other. All these will be helpful, but in the end, I hope that we're able to demonstrate empirically which indicators have the strongest correlation to audit quality. That said, as the release describes, the project will not result in a credit score-like measure for each firm or engagement team. Rather, the measures will have to be considered collectively to provide a balanced picture of quality of a particular firm or engagement team. In addition, audit quality is complex. A measure that may indicate good quality in one audit may not be relevant in another. Users of the measures, therefore, will need the context to understand the measures and how and why they differ between firms, industries, audits, or engagement teams. Whether or to whom and how that context will be available is one of the challenges that must be addressed as we move forward on this project.
Finally, an important consideration, one that I hope we receive comment, is how to strike an appropriate balance between the amount and type of information that constituents will find useful. Much of the focus in the concept release is on audit committees and their use of audit quality indicators. From our outreach, some audit committees have told us they already incorporate elements of audit quality indicators in their discussions with and evaluation of their auditor. Many audit committees have observed the amount of time it takes to discharge their responsibilities is increasing. We realize that any audit committee attention to audit quality indicators must be balanced with their other responsibilities and the backgrounds and skills of the audit committee members. I have heard the concern that the last thing an audit committee needs is another checklist. Some have expressed concern that some of our recent communications targeted to audit committees might be viewed as just that. It is not our intent to suggest that all audit committees should engage in discussion with their auditor about all audit quality indicators or ask every question suggested by the PCAOB. Some audit committee members may find discussions about certain indicators or questions to be too detailed, not essential, or not relevant to the particular audit. Rather, by providing a list of the indicators most correlated with high-quality audits, we hope to equip audit committees with a comprehensive list of topics to consider exploring with their auditor based on individual circumstances and relevance to their auditor. I hope the discussion of audit quality indicators could become a natural part of the discussion about overall audit strategy, including timing the audit and the significant risks identified by the auditor during the risk assessment process that is already required by AS-16 to just be a natural part of that. And I also hope that over time the discussions will be enhanced by the ability to compare indicators between firms and engagements. Lastly, I want to take the time also to thank the staff, and since nobody has named the long list, I will go through that list. So, and I hope I don't miss anybody. So, much thanks to Greg, who without his tenacity and insight, we would have not gotten here today. The tireless work of Steve Kroll, who's held the pen and had to sit in my office for many hours debating particular words with me, and the advice and contributions of Tim Gustafson, George Wilford, Jane Hutchins, Jung Nguyen, Helen Munter, Chris Mandelaris, Jean Theron, Elizabeth Entrenach, Marty Bauman, Keith Wilson, Jessica Watts, Lisa Calandrello, Jennifer Rahm, Claudius Modesti, Andres Finelli, Saad Zadiki, Christian Leutz, and Brandon Gipper. And also thanks to the SEC staff, which I will not go through that list of people, but your help has been extremely valuable. Thank you.
Thanks, Jay. Board Member Franzel.
Thank you, Mr. Chairman. I want to reiterate that I think the concept release on audit quality indicators today is an important step forward in this whole question of improving audit quality. And obviously improving audit quality is paramount to PCAOB's mission of protecting investors and furthering the public interest. But PCAOB inspections and enforcement activities have identified a disturbing number of serious audit deficiencies over the years and violations of professional standards. At the same time, many stakeholders and members of the profession have told the board that they believe audit quality has improved, and I tend to agree with that assessment. Yet we do not have the means to assess this empirically and on a consistent basis or on an ongoing and prospective basis. And the lack of such an assessment system, in my view, poses potential risks to investors generally. In 2008, the U.S. Department of Treasury's Advisory Committee on the Auditing Profession noted this and recommended that the PCAOB consider developing key indicators in audit quality. And I believe that today's concept release outlines potential conceptual framework for audit quality indicators that could achieve those objectives. The concept release seeks input on some fundamental questions about this framework and the potential uses of audit quality indicators. How such a system of audit quality indicators might be used in the future is not clear. Some of the ideas in this concept release are provocative, and I've certainly had many great debates with the staff on some of these indicators, and I believe that that's appropriate because these indicators are intended to drive positive change, and I hope that by putting this release out for comment, we drive some good thinking out there in the profession about audit quality and how to achieve that, and most importantly, how to measure and track that. Of course, change is difficult, and so this will be a difficult journey. I strongly encourage members of audit committees, investors, auditors, academics, and other interested parties to submit views to the board on the merits of the various indicators presented and options for proceeding with implementing such a system. And the details will need to be deliberated, but I think this is a great debate, and its time has come. So today's concept release is really the first step in an iterative process that should be centered on constructive dialogue among participants in our capital markets. And again, change is difficult, but we need to drive positive change through this concept release and through our continued work in this area. And again, I just want to emphasize the significant achievement of getting this concept release out there and beginning this next phase of the process. The ability to measure and monitor audit quality on a consistent basis over time has been unattainable for the profession and academics, despite decades of research and various rounds of audit crises in which investors and the public were seriously harmed. So I'm glad we're not doing this one in a crisis, but hopefully when we get through the process, we will have some protection and mitigate risk going forward and really improve analysis of audit quality and thinking about audit quality and implementation on an ongoing and forward basis. I look forward to a constructive and thought-provoking roundtable this year to advance the debate over the use of the system of audit quality indicators. And finally, I'd like to thank the staff of the Office of Research and Analysis for their excellent work and leadership on this project, along with staff from the other divisions and offices within the PCAOB and at the SEC. I think this is a great example of a matrix effort, a collaborative effort where people have really put their best thinking together to arrive at this concept release today.
To recognize board members briefly for questions. Jeanette?
Well, again, I want to ask a question similar to the one I asked for transparency, and that is moving forward. We're all thrilled to be here at this point today, but I think we've all acknowledged that there's a lot more to do, and it's going to be a difficult journey. So I guess if you could just talk a little bit about how you see the time frame going forward.
Well, the comment period ends, I think, September 27th or so. Between then and now, we would like to engage in an extensive amount of outreach to encourage all stakeholders to comment to us. So there will be a fair amount of outreach. We obviously need a serious effort to understand the comments and analyze the comments, and we're trying to be able to be in position to do that quickly after they come in. By putting together the right database frameworks and getting a lot of folks involved in that. The reason is that ideally in time for the public hearing, which we hope to have in the fall, the participants in the public hearing would have the benefits of the analysis of the comments and that we engage with them in a dialogue rather than repeating what many of the participants might otherwise have said in their comment letters, which we would have already considered. I think following the public hearing, the board would, I hope, undertake a series of deliberations in a structured way to consider what the next steps would be in the project. There, I think you have a very wide range of options that you will need to consider and debate. We'll want to consider the pros and cons of those, the alternatives that we have, and you'll have to pick one, which I'm sure that you will. So that's, I'm thinking in the November-December time frame, we would begin the deliberation over next step.
Thank you.
Jay Hanson?
So, Greg, the release has 28 potential indicators in there, and there's a variety of detail on them. As I mentioned in my statement, some are very specific and concrete that are kind of no-brainers that firms do it today, and others are kind of lofty goals to identify some way to do a measure when we don't really have that figured out yet. And so just wonder what your thoughts as to why we've chosen to put so much detail into there, so many indicators, what the benefits are of having this all laid out. And as one part of the question, the second part is I mentioned that ultimately I hope we can develop some empirical evidence that ties some of these indicators together with actual results, and kind of wonder where we're at in that process.
Well, let me split that question, as you did, into two parts. First, we included the detail we did in the AQIs to create a target for comments. We made it clear that we didn't think this was the only formula, but we wanted people not to say, oh, they say auditor turnover. What does that mean? It could mean this, it could mean that. So what we try to say is, here is one way you might compute it, or here's one way you might conceive it. Now, if there's a better way, getting not granular, but also not at 50,000 feet, please tell us. So I think that's the first answer. We did that paradoxically to suggest that our analysis was not complete. As we've all said, we all recognize, and I appreciate the spirit, and I think I can speak for all three of us, of the entire board in understanding that we are, we are trying to provoke people to think about audit quality. And I guess we thought that a certain amount of detail was necessary. Testing. Testing is obviously important to ensure the usefulness of AQIs. We think testing has three buckets. The first is empirical. What AQI or combination of AQIs correlates to positive audit results? The second is the root cause effort. We haven't said that much about the root cause effort today, but we're not siblings lost at birth. I mean, we talk to each other every day, and a lot of the work they do tests what we think, and perhaps with our comments, vice versa. 3, field testing. One of the questions we ask in the release is, what are your ideas for field testing these? Which I think we also think is important. But the ultimate test is going to be, and it can start tomorrow, whether or not stakeholders in the audit process use these and believe they enhance discussion. And that's really the reason for the outreach Greg is talking about.
Thanks, Steve.
Board Member Ferguson. Lewis?
Yeah. I want to know basically sort of who's saying we need AQIs. I'm aware of what the Treasury Committee said a number of years ago, and I also want to ask you, aside from the public outreach you've done, what other kinds of outreach have you done to find out who's really who is the constituency for this, who's the audience, and who's pushing for it?
Well, Lou, with regard to who is saying we need these things, the notion of AQIs is not new. Firms have long used AQI-like measures in managing their business, including managing their business for quality. The market has long used results-type measures that could be computed from public available data to get impressions about audit quality. And regulators, including the PCAOB, have long used AQI-like measures principally to understand where risk resides in, for example, identifying what audits to inspect, and when we arrive there, what areas within an audit to look at. So the whole notion is not some radical new concept that we're talking about here today. We've received, as I mentioned earlier, a lot of encouragement and input from folks who have said that there's a promise here to using AQIs to further discussions and insight into audit quality, including the ACAP committee, as we've mentioned, our standing advisory group, investor advisory group, many discussions with audit committee members, audit firms, the CAQ, securities and banking regulators, academics, and the SEC staff has been particularly insightful into AQIs and have really helped us with this project in many ways. As Steve mentioned, our root cause project has been an important confirming type activity about AQIs, and it's my personal view that some of the best insight going forward about AQIs will come from the root cause project as it deepens its sophistication working with the firms. So while we don't pretend to have all the answers at this point, I do think we have, based on the extensive outreach and input we've received, a heck of a basis for this concept release. Now, let me just mention briefly, in wrapping this up, this question up, that a lot of our outreach has been, well, some of it has been very public in the SAG and the Investor Advisory Group, but much of it has been in private meetings with groups. Extensive private meetings with audit committees, and here I commend the board because you folks have done the hard, heavy lifting with most of that as opposed to the staff. I think we've done good work in reaching out to IFER members, and Lou, you as chairman have put a number of events on the IFER calendar, and we've had dialogue with nearly every IFER member now about audit quality indicators. We've had a lot of discussions with firms, both through the CAQ effort on audit quality indicators and their substantive project in that regard, as well as individual firms themselves. We've interacted extensively with our Investor Advisory Group as they prepared their report to the board. And finally, we've worked closely from the very beginning with the SEC staff, who, as I just mentioned, has offered particular insight. So I really think that the extensive outreach has helped us with our understanding, and I'm sure the comment period will do so as well.
Steve Harris.
What are the issues that you view as particularly controversial in this concept release?
Well, first, let me just mention what maybe perhaps remarkably isn't controversial. I think at 50,000 feet, the broad notion of AQIs as being helpful to furthering discussions is not controversial. There seems to be a wide, almost consensus that is appropriate. Another point of consensus is the nature of the AQIs themselves. I'm not talking about the detailed indicators, but what makes a good AQI. The fact that they operate as a portfolio rather than just one at a time. The fact that we're not trying to score audits here. This is not a report card. Rather, we're trying to inform discussion. Gets a lot of traction with people. So the nature of AQIs is not controversial, but like many projects, the devil is in the details. And where the controversy occurs is now where you start really getting into how this would really work with the AQIs themselves. And of the 28 AQIs that we have as examples in the concept release, the ones that I think we're going to get the most spirited comment on are the ones that are new, the ones where today we don't have the data. I think those are going to be spirited comment. On the usage side, the big controversy and where we really need a lot of discussion and debate is on the question not so much about the use of AQIs with audit committees. I think there's almost consensus that that could be a useful thing to do, but rather whether the AQI data should be made public. That is where I believe, main controversy lies, Steve.
As has been noted, ACAP, the Advisory Committee on the Audit Profession, began with a recommendation that both an audit quality indicator project and a transparency partner signing project be undertaken by this board. What's the relationship of audit quality indicators to the supplemental request for comments we've heard today? Is there a suggestion that if audit quality indicators turn out to be the useful and widely accepted tool that we hope it will be, that we just won't need to identify the engagement partner in a PCAOB form? I think that bears a little comment.
Well, I think because of its nature and breadth, the AQI project touches on many aspects of audit quality, including such notions as adding discipline through measurement, aligning the incentive system for auditors, and increasing transparency of auditing. So I think it is not in lieu of other transparency, but rather it complements greatly other initiatives that the board might undertake with regard to transparency. Let me mention just three particular projects that the board is currently undertaking, which I view to be close cousins of the AQI project. The AQI project shares with the board's root cause project a desire to identify and measure the drivers of audit quality. They are two sides of the same coin in the staff's view. Second, the AQI project shares with the board's project on quality control, the new QC standard, the notion of improving audit firms' processes, including measuring auditor quality. And the AQI project shares with several board projects, as I mentioned, increasing transparency of audit work and results to audit committees and, in some cases, the public. So I believe, Mr. Chairman, it's a very complementary project rather than one that is done in lieu of the other important work the board's undertaking.
So we are in a both and not an either or mode.
In my view, yes, sir.
I will call for a vote. Will all board members...
Another question?
I'm sorry?
Can I ask another question?
Oh, sure. Yeah.
A second ago, Greg, you mentioned the issue of transparency, and the concept release asked for comment on whether AQI data on an engagement and firm level should be made public in whole or in part. I was wondering whether you would discuss whether you think investors would still benefit from the use of AQIs and what those benefits would be if such indicators are not publicly disclosed.
Allow me to take that one. The concept release discusses the indirect benefits to investors, even if AQI usage was limited to private discussions between audit firms and audit committees. First, investors would benefit from any improved audit quality resulting from AQI usage. Furthermore, they may benefit from any disclosure that audit committees or firms might make in response to market demand for AQI data.
Other questions? Hearing none, I'll ask all board members to signify their approval of issuance of the concept release by saying yes. Yes?
Yes.
Any opposed, please say no. Congratulations to you all. We have a 15-minute break before a closed meeting. Before there is a rush for the door, I should note that this board is indefatigable in getting on top of heavy and detailed reports on both annual and triennial audit firms, getting them out on time so that the profession knows how they're doing. And today is one of those days in which we have a closed meeting in which board members have had to devote time both to the basic blocking and tackling of approval of triennial and annual reports, remediation determinations, enforcement recommendations, referrals to the SEC, the whole 9 yards of what the board does day by day outside the public view, and with a lot of blood, sweat, and tears. So with those requests that we gather here again at 2 minutes before 11:45, let's say 11:43, I want to adjourn the meeting and thank all of you, and congratulations to the officers here.
We can get through it in 15 minutes.